Good afternoon, everybody. Scott Riley, the Market Update Desk, April 28th, with Mortgage One, NMLS number 157528. Woke up and there's some interesting information and news that came out today, specifically regarding OPEC and the Middle East. The UAE, United Arab Emirates, announced it is going to be leaving OPEC effective May 1st, just in 2 days. So, really, not any heads up on this either. Now, keep in mind, they joined the organization just under 60 years ago. Now, the UAE's departure from the group comes after, years of there's been friction between them and the majority of OPEC. Uh, the UAE has chafed at production caps that the OPEC has been putting in place. They've pushed to raise quotas and produce more oil. Now, with Saudi Arabia, OPEC's largest producer and its dominant force, traditionally pushed back on raising oil production. This dispute sometimes prolonged or delayed OPEC meetings. If this leads to increased oil production from the UAE, we could see downward pressure on oil and possibly could lead to more states, OPEC states, increasing production in opposition of production quotas from the majority of OPEC. So this could have some downstream effects, helping oil, helping gas, lowering utilities, which would then also lead to potentially lower inflation. Now, this is not immediate. This would be a long-term situation. Now, the other thing we saw within the Middle East is Iran is running out of storage capacity for their oil production. In fact, they're starting to move storage onto floating tankers. That's very unusual, actually. I think the projections are in the next 3 weeks, if they can't move oil due to the embargo that is the U.S. Navy right now, that could lead to them stopping production. That has also downstream effects. When a lot of this equipment is not used, it becomes very expensive to get back started and also erodes some of it. Geologically, you could also have geological effects from not extracting the oil, which could cause some environmental damage. So there's a lot of things going on. If Iran can't move that oil and has to stop production, it could be billions of dollars that they're going to have to invest in infrastructure. So very interesting there. On Wall Street, we're seeing once again earnings season is in full swing. In fact, today we saw Coke beat estimates on sales and bottom line. In fact, they also raised forward guidance, which is a little bit of a surprise. Now, yesterday, one of the big things we saw was OpenAI actually missed earnings estimates of what they were forecasting. This has caused some downward pressure on associated chip makers such as Intel. Now, Intel, gosh, for the last 3 weeks, up about 80% of their total stock price. So, interesting things going on in the market there. Apartment List came out with their rent information today. We saw that new rents year over year shrunk, so a negative 1.7%. That's the lowest pace since 2017. The benefit of this is the affordability quotient, specifically on rentals. But this shows up in inflation reports within shelter costs in the PCE and CPI. Because shelter cost is the dominant force in inflation numbers, we could see that benefit show up in lower or continued depressed shelter costs, which would be very nice to help maybe offset some of the higher oil and utility costs that we're seeing flow through. The 10-year Treasury, it's up about 10 basis points from where we were about a week and a half ago. In fact, we're at 4.364% yield. 4.4% is a very important barrier. So hopefully we get a little bit of relief within the bond market. Oil, it's up today about $3.48 a barrel, bringing it to $99.85 a barrel. That $100 barrel is a very psychological barrier. If we can get some positive information, maybe we can get that coming down. Crypto, been following that a little bit lately, and it's had a little bit of a breakout the last multiple weeks. In fact, Bitcoin's up to 79,560, 79,560. Not that long ago, we were hovering in about the 65,000 range for Bitcoin. So some positive crypto information there. It is a little bit cooler out today as I look out the window. We're in the, I think, upper 50s right now. It's a little bit different day here in West Michigan. Give us a call. The spring market is out. We're seeing more listings, but it's still very, very competitive. Give us a call. We'll look at some options for programs, look at some opportunities for you. 616-293-2189. The Market Update Desk is your original singular market news source for West Michigan. Have an awesome afternoon.